Hello again, Roy.RealEstate here with Coldwell Banker Legacy in San Angelo. Today I want to talk to you a little bit about owner finance and or rent to own. A lot of times people who have difficult credit issues will call and ask about places that are available for rent to own and even owner finance. And basically in today's world, rent to own is we don't see them on the multiple listing service. I mean, they may exist. You may be able to find an owner who's got a property they're willing to sell and do that, but it's a real rare occurrence. And then because it's a very complicated transaction, so you got to set a deal that, okay, for this year, so many dollars go into a down payment or however it works. If you stay this long, it's a very complicated negotiation. Then it's going to have documentation written by a lawyer. So it's several $100s even just there, getting everything written by the lawyer to be legal and make a contract that'll happen. And there's just very, very few people that are willing to do that from a seller side. Owner finance happens a little bit more often, but even it's pretty rare. Basically, most people that are selling houses are just like you and I. They need to sell the house they're in before they buy the next one. So keeping it and financing it for someone else is really just not an option. So there are rare occasions that there's an investor, someone who's bought a house and is trying to sell it and is willing to do owner financing on it. But you got to understand some things about that. What happens is, because they're typically, the reason someone wants owner financing is because they can't qualify for a normal mortgage. Okay, so normal mortgage rates are anywhere 3 to 4%, kind of depending on your credit records today. And so when you go into an owner finance, these people, they're wise investors. They are in this business every day. And so what they're going to do is they say, okay, well, you're a higher risk. You don't qualify for a normal mortgage. We will do this for you, but it's going to be at a higher interest rate. And that could be 6 to 10% or even more, depending on kind of the circumstances, how much down payment somebody's able to put down. A lot of the reason people are trying to do this, they hear people say that you're throwing your money away if you're renting, and I disagree with that. I think if you're renting, you're paying for the fact that it's convenient and temporary. It's not, you're not committed to it long term like you are if you buy a house. So to me, the best long-term answer for someone who's in that situation, you're ready to buy a house, you want to buy a house, but you're not financially ready. And basically it's the stuff Dave Ramsey's been preaching for years is, stop borrowing money, live on what you have, then start working on paying down your debts, build up your credit score by being responsible with your debts. And once you get to where your debt and income are in alignment and your credit score is better, then you'll be able to qualify for a real mortgage. Because honestly, if you get a owner finance at 8 or 9 or 10%, you're going to pay way more there than you would have paid in that same period of time renting the house. Now, if you take 2 years to get your credit fixed and get your debts in order, paid down some, do what you can in that, do all that, then at that point you'll be able to qualify for a normal mortgage rate and get in with a lot lower payments. So it's just realizing that the best way to do it is to get your finances in order and be able to qualify under the normal rules instead of trying to go out to this and basically those people and different ones, some of them, they know there's greater risk from a person whose credit's not there of them not being able to make the payments, and they're perfectly willing to have to repossess the house or whatever at some point in the future. And then they can turn around and sell it again, which is, it's not wrong. It's a decision they made and how they're trying to get people into a house that want a house. So, but I think the better answer is take the long-term view, get your finances in order, pay your debts down, quit borrowing more money, and save up the money you need for a down payment, and then you can qualify for a loan for a normal mortgage, and then that increases your options. Don't buy more house than you can afford, just be really wise with it. And that's the long-term solution. Trying to find rent to owns and owner finances, again, there's a rare occasion where it may make sense, but it's pretty rare. Generally the best is for you to take responsibility for your financial situation, do what you can about it, and move forward from there. So anyway, if you got any questions or whatever, we'll talk any more about it, give me a call. Roy.RealEstate, 325-268-0775. Thank you.